Good morning, my name is Dr. Ulbrich. I'm very glad to be able to show you a new strategy which is called generic regression. Generic regression because it works with regression. Before I show you how the strategy works internally and mathematically, I will show you some of the performance reports which I was able to generate with the strategy. And as I trade these performance report in my own account since some time, we just flip through because I made a workspace for the general public. This, for example, is gold. Flip through to the performance report. This, for example, is coffee. This, for example, is I think the Nasdaq. This is soya. This is soya meal. This is the Dow index. This is again gold. This is the FDAX, the German FDAX. This is I don't know. This is here is a Canadian dollar. This is oil, crude oil. This is the dollar future. Feeder cattle. This is the German bond. This is the Japanese yen. This is gasoline. This is soya meal, a US bond. And all the performance reports have high average trade net profits. High average trade net profits in the sense that I normally look for an average trade net profit which is more than $400 per trade. And so I might even trade it if it is $200 per trade, but normally I want to see $400 per trade. And basically all these strategies have an average trade net profit from minimum 200 or most have $400 per trade. And what I did here, I just simply combined different entries and exits to get all these strategies, and I will show you how you can do it. And all these performance reports were produced with the generic regression strategy. And what I do normally, I make a performance report. This, for example, is silver. I make a performance report and then I save it and with the settings. And once the time has passed, maybe half a year or something like this, I look into the same settings again and see how had the strategy developed. And you can do easily the same because you can test the strategies for free in Strategy Network. And if you are interested to do a second check after maybe half a year, send me an email. We will see that you can do it. So I showed you some of the performance graph which I trade, and I made a workspace here for the trade station. And on this workspace, I simply show you some combinations of possible trade strategies which you can develop. And these combinations, I simply pressed optimize to get an optimized result. And I did not care much about walk forward here or whatever. So what you can see, it's basically a relatively straight line. It's for the last 5 years. And the average trade net profit here is $427. And I will take 2 minutes now to talk with you how the strategy works. The strategy plots a regression line here into the closing prices and estimate due to slope and gradient and other secret parameters how the trend will behave. And if closes step out of the estimates, the strategy will close the trade or go open a new trade. For example, the blue dots here are the signals for long trades. The red dots are the signals for short trades. And what you can see here is that here, for example, a long trade was started after this blue dot. Oh, I'm sorry. And then this blue dot was saying, yes, the long trade is okay. Here's the same long trade after this blue dot. Okay, okay, okay. And here a long trade was started after this blue dot. But then a red dot came, and a red dot means trend is not okay anymore. And here again a red dot, and again a red dot. And you can see here, if we had stopped the trade after the first red dot, we would be able to maybe close it without a loss. But we stayed in the trade, and I will show you now how you configure the strategy that the strategy will close on the red dots. The strategy input parameters have two parts. Which you can see here. These 6 parameters here are the input parameters, and these 4 parameters here are the exit parameters. And you can choose different exits by putting here 1, 2, or 3. First we look through the input parameters. With these 2 parameters you shift the regression north and south, and the rest are length parameters which you need to get valid results. Here on the exit you can put in 1, 2, or 3. Exit 1 only uses the stop long and stop short parameter and always goes out after the first dot in the other direction. If you trade long and you get a short signal, it will trigger a stop mechanism. And the stop mechanism may even take 20, 30 or 40 bars, because it will only react to strong moves. So the stop is triggered, but it does not mean that the stop happens directly. And so 1 triggers the stop on the first reverse dot. Then if you choose exit 2, you can decide on how many of the reverse dot the exit will be triggered. For example, if you put in here 5, the exit will be triggered on 5 reverse dots. And then these parameters will be used to trigger the exit. On exit number 3, it will only count how many reverse inputs are happening and exit after X reverse inputs. For example, if you put in here exit number 3 and here 5, it will exit after 5 wrong signals. And if you put in here 1, if we had chosen here on our example, here if we were long and chosen exit number 3 and put in the number 1, the trade would have been exited here. But it does not always make sense to exit a trade fast. So for this reason, we have to carefully think about when to exit a trade. We will look together now over these examples which are provided in the workspace, and these are not examples to trade them directly, but just to give you a feeling how you can combine different parameters to make a good strategy. What I did here, I had chosen some of the commodities which I trade, but not in the settings which I trade. And this is not because I want to be bad, because I just want to help you to develop your own strategy. And what I did here is I took always exit 1, exit 2, exit 3, exit 1, exit 2, exit 3 in the first row. And we will look for the results, because the exits will behave very different. Here you can see the first exit, exit number 1, trades a relatively short time frames. So it's the parameters are chosen here that it exits relatively fast. Here it holds straight a little bit longer. This is exit number 2. And exit number 3 is holding trades even longer. And this is because the parameters of the regression have to be shifted in a way that it is not so sensitive, because you remember that exit number 3 is the exit who exits after X wrong signals. And this is not done, these examples are not necessarily done to have a good performance. So if you are interested to trade, and if you are not able to find any good combination, give me an email and say me what you want to trade, and I will give you an example out of my deep pockets from a commodity which I trade. So here again the same, corn with exit 1, corn with exit 2, and corn with exit 3. Okay, so good so far. And this is only the strategy. This is only the strategy as it is. And if you look in here, you see here on these format analysis techniques only this strategy. And what I did now is I pressed the insert strategy button, and I insert different strategy components from TradeStation. And we will now look through the TradeStation parts which I added. And I start below because many people ask for day trading strategies, and I'm not a big friend of day trading, but here I took the ES.D, which stands for daily close, and I added the close end of the day trade station strategy. And the generic regression, it went out of the picture, I could not see it again. I put the sell off here and the buy to cover off, and for this reason the strategy is not able to use the exits, and it will only exit end of the day. And this is what you have to do. You have to put the sell and the buy to cover on off, like here, to prevent that the strategy can sell, and then you can use one of the straight duration components. And as all the inputs are open, it's easily to find something yourself. So if we look into the E-mini strategy here, we can see a performance report which showing us a relatively straight performance line, and also the average trade net profit of $93 would let me assume that the strategy might be profitable in real life trading, but this is something you have to decide yourself. So now we look through our examples, and if I look into the examples, I see, for example, here that we will have a look. We will have a look because what also is good together with the strategy is the channel exit. The channel exit, I will explain you what the channel exit is doing. You can see here I have entered the channel exit, channel LX, channel SX, and the channel exit will look back 10 bars here, and then, and this is length, the length parameter, and it will put in a stop $3,000 below the last 10 bars, and it will go on with the next bar, so it will let's say trail. But the benefit of this is that it normally should not be triggered intra-bar, and that you can do the backtesting without the intra-bar on. So you don't need to use this, you can leave it empty and just maybe turn it on at the end to check that your results are valid. And the benefit is that the backtesting will get much faster if you do it, and it should not change the result. You can see here, for example, the average trade net profit is $534, and the performance graph is quite good. You have 300 trades, and you also always need a couple of trades to be sure that the strategy is valid and will deliver it in the future. And yeah, so this is a good strategy, and you saw that we used the channel trailing stop here to produce this strategy. And in the workspace, simply some examples are presented. For example, here the dough, the dollar, the coffee, but I think on coffee you can do a better strategy than this one. The natural gas, the feeder cattle, the live cattle, we saw these, the soya trades, and here the cotton. And on this, I think again I use the channel trailing LX, channel trailing SX. Here the US bond. In the US bond, for example, we have a 300 average trade net profit. On this we have a 800 average trade net profit. On this we only have 146 average trade net profit. Not so much. Maybe think about if it is good in this way. And on this here we have again the channel trailing LX, channel trailing SX added. The graph looks good, and the average trade net profit is low, only 150. So we have to think about if it is a good combination. But I encourage you, try your own. If you find a good one, I'm happy to get it. I'm happy to give you something back which I have developed, because I have more than which you can see here in the workspace. And so yes, I wish you success with trading, and say bye bye.